Is it the golden cross or the death cross for the S&P 500? We'll explain that later. Hey, hello, fellow traders everywhere. Adam Hewson here, co-founder of MarketClub, with your midday market update for Monday, the 30th of January. Hard to believe that January is over, but we'll be talking about the golden cross. We'll also be covering GANNET, Staples, and the CBRE group, as well as looking at some other markets that I think you might find interesting right now, including gold and silver. So let's go to our first chart. The first chart we'll be looking at, we're going to go to our portfolio manager, as always. And we're going to go just right to our portfolio manager. And the first chart is going to be the S&P 500 cash. It's a plus 55, plus 85, excuse me. Strong trend. This is not, don't ignore this. And this is when we talk about the golden cross, the death cross. This is what we're talking about. So what you're looking at is a plus 85, really mean the trend is up on monthly and weekly, still positive in the trade triangles. Now, if you look on the chart, you're going to see two lines. It may be hard for you to see, but I'll try to illustrate them better with my telestrator. And that is, you're going to see a 200-day moving average, which is right here, which is the green line right here. And you're going to see a 50-day moving average. And the golden cross basically means when the 200-day moving average is penetrated by the 50-day moving average, as it was right here. Okay, so that's when your 50-day moving average went down. This is the 200-day moving average right here. And this is the 50-day moving average. Now, a lot of people watch this, so it's definitely worth looking at and being on your radar screen. So we're coming back out, and look at how close we are right now to this level. We haven't crossed yet, but it's very, very close. It's interesting because our trade triangles, the monthly and the weekly, are positive, indicating that's a strong possibility that it's going to go higher. The other thing that's interesting, if you look at the cyclicality, I'm going to click everything off the screen clear, and I'm going to go out in this market. Sometime you'll see, let's just go a little further, 5 years should do it. And if we look at this, we can see that if you look at these time periods, and this is what I want to share with you, this is why I think it's pretty fascinating that this is the case. So you look at the first cross, which is right here, and yeah, right here. Nice move up. The next cross is right here, and you can see it right there on the screen. Nice move up. And we're getting close to going up again. Now, the question I have for you, if you look at the lows right here on the longer term, or excuse me, on the 50-day moving average, it would appear as though the low is right here, and also right here. So it looks to me potentially like you are in a move that you could see similar to this level and similar to this move, which would take us into the May period of 2012, which is, of course, not that far away, but it would indicate that we're going to see higher levels. Now, technically, we can see this market going to, as we said, the 370 to 1380 levels, and I think that's something you want to watch and look at, and I think it's definitely potentially in the cards. Now, the market's acting pretty well today because you've come back from the highs, but you're staying well above the 1300 level, which should act between 1295 and 1300 should have very good support in this market. So let's see how that works out. So let's close this. Actually, let's just clear the screen because that's going to be important to go to our next market. And that is going to be the silver market. And the silver market, pretty much, we've left across it. I don't think it's quite so important in this market, but some people like to look at it. But let's just go a little closer in on this market. And it seems to me that this area, right around the 34 to 36 level, is going to be massive resistance for silver. I just don't see how we can get out of that anytime easily. But you've got your monthly and your weekly at a conflict. We have a plus 70, which is an emerging trend to the upside, but still it's not there yet. So really be a little bit careful on that one. Also on the gold, pretty much the same picture. You have a mixed monthly and a weekly, and it would seem to me as though we need to resolve this one way or another. Now, you do have a situation where your 50-day moving average has crossed below the 200-day moving average. Now, it hasn't happened that often. So if you go back, let's say 5 years, you can see that's the first time that has happened since really back here in 08. So it doesn't happen that often. So it may be something to look at. But our monthly trade triangles are negative, weekly positive. It's a conflict. So really, we have not been so enthusiastic about buying gold. I think the 1750 to 1800 level is going to be a real massive amount of resistance for this market to climb over, and at least initially. Let's see how that plays out. So next market we're looking at is going to be the copper. Now the copper is a little bit different in my mind. We had our trade triangles are positive, unlike gold and silver. All the monthly and the weekly are positive. You've crossed over the 200-day moving average. Of course, that's a big one, and you've been over the 50-day moving average for some time. So it looks to me like this market looks like it wants to go higher, and that would dovetail very well into the economic expansion that we can potentially see in the equity markets around the world. So let's see how, and again, this is what we think could happen, but you have to have everything in the market. You have to move with the market, not fight the market. So if the market starts going down, we're going to go down, and we're going to get out of a position and probably go short. So let's go to our next market. That's crude oil. Crude oil is a minus 60. Now, what's interesting, the minus 60 gives us a trading range. And as you can see, the 50-day moving average is pretty much flat here. We've been going sideways for the last 9 days in crude oil, which is pretty unusual. If you look back, it always seems to have a move, but we need to get over the 102 level and then the 104 level if we're going to go higher. And on the downside, we really need to get below a good strong close below 98 if it's going to go lower. So I think for the time being, it's in limbo, in the trading range here. If you look at some of the other indicators, we're not overbought, we're not oversold, we're sort of like in the neutral zone there, and there's not a lot going on. The only thing that's possibly going on is the fact the MACD is becoming tighter, which means it's going up, the momentum is going up. So we may see I think the surprise is going to come to the upside because our longer-term monthly trade triangle is positive. But right now, you can see if I put our weekly one in, you can see it hit right here at 97, 93, around 98. It's 99.17 last, so it's definitely underwater. But there's really not a strong compulsion right now to push this market anyway, either up or down. But generally speaking, my bias is to the long side based on our long-term monthly trade triangle, which has done very, very well historically. So let's go to the next market, and that's going to be the Forex market. So we're looking at the Euro, USD. Again, this is the 132. We hit those levels. We came back down. Europe is just one mess. It just continues to be a mess with the infighting and all this other stuff that's going on there. Who knows what's going to happen there? And that, of course, is wagging the tail over here. But generally speaking, the longer-term trend in the euro is down. I mean, that's a given. The weekly is up right now, as is the daily. So nonetheless, I think you have to be a little bit careful with these markets. And if you're interested in how we trade Forex, real-time Forex prices, we have a formula we use on the trade triangles, which has done extremely well over the past several years, and it's one you may want to take a look at. So let's go to our next market. The next market we're going to look at, of course, is the dollar index, and this looks a little bit negative too because you've broken below the 50-day moving average. Okay, that's one thing, but you haven't changed the long-term monthly trade triangle. If you look at the monthly, the 200-day moving average, you can see it's actually been trending up here for the last several months, and I think that's one of the important things. Is this going to be an area where it's going to find support? Well, we could put in our Fibonacci numbers here, which is something that if you're not familiar with Fibonacci, you may want to take a look at it. In fact, I just read a fascinating book about I'm reading a fascinating book about Fibonacci right now. And actually, even though it's called Fibonacci, he did not invent this. This is from the Indian and Arab worlds. Was mathematics. So here we are, we're back into a 38.2% zone. We could possibly go to the 50%, which is 78.23. I think there it's going to look to probably find support, and we'll start to see this market go a little bit higher. But we are oversold. Look at how oversold we are in this market. So that's something else to be careful of. But the momentum is just flattened out with the MACD. So you can see that's just beginning to flatten out. These bars aren't getting any lower. They're actually starting to flatten out like they did here and start to move up, and that usually pertains to a change in direction. So let's see how that plays out. Now we're going to look at our CRB index. Now this is kind of a little bit of a surprise. We were looking at this formation. I'll just draw this from the telestrator on the screen to show you what we were looking at. And we've always had, our concern has always been, let me just take this off. Our concern has always been this. We thought this is basically kind of a really nice head and shoulders base, and it may still be there. But falling back like this, around this level right here The 316 level was the high. So somewhere around here, this market should find support. Now, if it doesn't find support, we have to abort this formation, say it was not the correct reading. One thing that's always concerned me, of course, has been the monthly trade triangles, which are still negative. And that's a given. So we want to wait until we see perhaps a real turn in the market, and this indicator, our monthly trade triangle, turns green. And that's the case. We'd like to get long, very seriously long this, because I can see inflation kicking in to the equation here for the United States. So let's see how that plays out. But generally speaking, it looks as like we made a turn, but we've not turned on monthly trade triangle, which is the one that we really want to see. So let's clear the screen again. Go to the 3 stocks we were talking about earlier and see if we got it right. See if MarketClub's trade triangles got it right. And these are stocks that are in the news. We just didn't pick them just to show you because we thought they were cool. First one is GANNET. And our long-term monthly trade triangles from 1240. The market's trading at 1411, even after today's big break. Actually, the market's down 7.29% right now, but it's still above our monthly and our weekly. Now, the question is, how far is it going to go from here, and is it a buy right here at this level? So let's just use our Fibonacci tool. We'll go from the highs, scroll it down to the recent lows, and I would say right around the 1380 level, maybe another 20-30 cents lower on this market will be a pretty good area of support based on Fibonacci. You're trading with the trend, of course, with the monthly being up and the weekly being up, so you'll actually be looking to purchase this at a good level on a pullback in a bull market. Now, you could also argue that the low was here, and the Fibonacci retracement could get all the way back down to 1238, which is the original buy point on the monthlies. I think what you want to do is watch the action. You just don't have one day's action. Wait to get several days' action of support, and you see some sort of technical display that the market has turned around. We are in oversold condition, and I think that's going to be pushed down. The MACD just turned down, so you may want to give this market some space. So what we could do, and more than likely will do, in my opinion, is I think we'll come down maybe even further like this, but generally start to base out like we did here, and I think that's what you want. You want to wait and see that turn and then jump on board, because the trend, obviously, with the weekly and the monthly is still very positive. So let's go to our next market, and that's going to be a market that's kind of interesting. So I would say we got this one right. The trade triangles got this one right. That's GANNET, and this is the CBG, CB Richard Ellis Group, and I don't know what they do, but two things that stand out in my mind on this one really quickly is the monthly trade triangle is negative right here, negative, so that's not a good sign. You've got a 60 reading, which is a trading range, and it's a trading range, and you're also below this is the 200-day moving average. You're also below the 200-day moving average, plus if you just scope this right freehand draw it across here, you're at a previous area of resistance. So I would think this market, at least for the time being, was going to be a little bit more on the defensive, and perhaps pull back to the 17, 18 level. But certainly we're saying it's a trading range, and we're at the top of the range based on just below the 200-day moving average, just prior to the highs that we saw in November. So generally speaking, I think there's a good chance we'll see this market a little bit more of a pullback, but we'll see. We'll see what happens. But generally speaking, I think we got this one right too, because we were monthly short from 24.30. It's currently trading at 18.31. So I'd say we would be pretty happy with that kind of return, I think, as an investor. So let's clear the screen and go to our last stock. And the last stock we're looking at is Staples, and this is also an interesting market. And let me just clear that off the screen there. So here's Staples. I've got a weekly and monthly in there. So the monthly came in at 15.55. The market's trading at 15.13. So you can actually buy Staples right today at a better price than our monthly trade triangle kicked in. The weekly came in at 14.79. So if you average those twos out, maybe it comes around 14.79. But let's just go a little bit closer and see if we can get a better picture. So this is what I was looking at on this Staples stock chart, and that is I take my Fibonacci tool, which we showed you earlier, scope this down to the lows, which are going to come in right around there, I would say. You could scope it there, but you can see 50% is 15.05. We got very close to that today. 61 0.8% is 1475. That gets back to the weekly. I would say somewhere along those lines, you are in an uptrend. You probably want to look to be a buyer in this market. We closed over the 200-day moving average, so that's another good sign. So generally speaking, there's a pullback in a bull market, and you want to be looking to be a buyer somewhere along the line here. And we also, but I'd give it a few more days. Just give it a few more days to sort of catch its breath, so to speak, and see how that plays out. But generally speaking, we'd be looking for this market to move higher. But lastly, you may want to consider, we've come to the end of January. We're coming to the end of January right now, but you may want to check out one-on-one Market Club coaching and see if it's right for you. It's a free phone call, 877-219-1482, and it's a free consultation. You can't ask for more than that. So just give us a call, see if it's right for you, and see how you can improve your trading in 2012. We're very excited. It's going to be a good year, lots of opportunities to make money, and you really need to be on top of these to manage your own money and your family's money. So I'm Adam Houston. I'll see you tomorrow at the same time, right around midday, 1 o'clock, to talk about the markets, the updates, and help you keep on the right track. I'll see you tomorrow. Have a great trading day.